Hello, everyone, and welcome to today's session. I'm joined by Laura Kennedy, co-founder and managing partner of Circle Management Group, and today's topic is law firm compensation models. Give me just a second to pull up our presentation, and in the meantime, we'll go through some housekeeping notes. Today, we want this session to be very interactive, so please feel free to enter your questions into the questions pane or the chat box as we go. I will be moderating as Laura will be our subject matter expert leading today's presentation. So without further ado, Laura, I think maybe where we can start, Smokeball's mission is to help our firms run more profitable practices. I think that today's session is really, really important. It's one of the questions that I get most when working with small firms, and is really outside of my personal wheelhouse as far as law firm coaching is concerned. Law firm compensation models can be a tricky area to navigate because you want to offer your staff and employees, both attorneys and non-attorneys, compensation models that motivate them. And Circle Management Group, in your experience in particular, you have worked with firms on everything from technology to business analytics, profitability, but then also those strategic plans and helping them grow their firms. So maybe if you could just give our audience a little bit of background on your personal experience and how you work with firms to really look at their whole practice and put these compensation plans in place. That would be, I think, a great place for us to start today.
Sure. So one of the offerings that we have for our clients, and it goes back to the foundation of who we are and the foundation of our name, is that managing a law firm and the business of law is really important. And it's something that I don't think a lot of attorneys really know about as they come out of law school, how to really work, how to manage money, how to think about client service, really being the epitome of what profitability means. If you've got excellent client service and that is your focus, really the focus from nuts to bolts, that will bring your profitability up much more and much quicker than any compensation model can actually do it. But we do help partnership agreements, compensation agreements. We evaluate compensation and partnership models all the time for our clients. Clients constantly ask us, is this the best that we can do? When they get very convoluted, it gets really hard to manage that through reporting and metrics and things like that. So I think keeping it simple is always the best bet when it comes to compensation models. Keeping your employees and your clients front of your mind as you're building that will always make it be a really good model for the firm to follow.
Thank you, Laura. And today's agenda, Laura will be walking through the different compensation model types, and then we'll move into incentive programs for non-attorney staff. So there are ways that fall and are allowed from an ethical perspective that you can incentivize non-attorney staff, your intake staff, appointment setters, care coordinators, people inside of your firm based on merit or performance. We'll go through some of those options. Then we'll move into creating and tracking employee performance, and then mention any resources that will be available to you after today's session, such as reaching out to Laura for a consultation. So without further ado, we're going to dive in and start with attorney compensation models. The first one, Laura, is lockstep compensation.
So the lockstep compensation model is when you're paying your attorneys based on seniority and how long they've worked for the firm. And it's a scheduled model. You know, if you have X number of years, once you reach that, you're going to be able to get paid X amount of dollars. It's kind of the rank and file system, and it has nothing to do with performance. It has everything to do with longevity with the firm. And so that model is is really it's a very traditional model. And you see that model only really within some of the firms that have been around for a very long time, if they still subscribe to that model of compensation. A lot of firms don't use this anymore, but it is the traditional, most traditional way of compensating lawyers.
And would you say, Laura, that in your experience, a lot of firms, I know I've been to firm retreats where they're trying to move away from this model because the trajectory for younger associates and partners is not as attractive. Like they are looking for more performance or merit-based compensation structures.
Right. And but once you're in it, once you're in a compensation model, it's really hard to back out of it because you've got equity and all sorts of investments by the partners that are involved in that, and they went up through the system, and so changing it takes a lot of work to do that. But you have to weigh the pros and the cons against keeping with that compensation model and acquiring new talent, and what you really want the firm in 5 years to look like. Do you want it to be associate level 1, associate level 2, associate level 3, junior partner, senior partner? Is that what you want for it to be? And because what you're saying is correct, a lot of the younger attorneys coming out don't want to go through that type of system. They don't want to go through those levels. They want to be paid based on what they do and how they perform. So the merit-based compensation then is a little bit different. It's merit-based compensation is based on your work, how many hours you bill, how many clients you originate, how much revenue do you as an individual bring in, how many successful cases do you have, and then other subjective features that the firm wants to try to add in to try to balance out compensation. So you'll find things like how many hours do they put into marketing, and how many hours do they put into business development, and what was it might be one client, but how many matters does that bring in, and how much revenue to the firm, and all of those things. Are they a good leader? So the firms try to do these subjective factors along with the objective factors to kind of figure out, what is this, what should we pay them? And so that gets very confusing for people, especially newer attorneys who don't understand what the rules are. They work hard, they originate clients, and yet maybe, somebody else got a bigger bonus than them, or they didn't get the bonus that they expected because it's the subjective factors, because they can't account for that. They can only account for the objective metrics when they're tracking their own numbers and not the subjective assessment of partners. So that creates a lot of chaos sometimes when the compensation is doled out at the end of the year, at the end of in mid-year review, or wherever it ends up being.
And we have examples of some Smokeball reports at the end of today's session that will show how to measure the part of compensation plans that I think a lot of law firms miss is that you can put all of the plans and targets and KPIs in place that you want, but if you don't have the ability to report on those metrics on demand, or it's a lot of work to do compensation reporting and it's not tied into your practice management and your billing system, they can be much more work and create those HR issues within the firm that can be easily avoided. So before you before you roll out a compensation program, make sure that you're able to report on it. The next is that classic eat what you kill compensation model, which is very rainmaker based or comes from a rainmaker driven environment.
Right. So the eat what you kill is very high on formulas that have to do with origination and closing of origination. So these models get very specific, and they are things that can cause a lot of complication from a reporting standpoint, because they are extremely subjective type of compensation models. And these models follow along mostly with a solo practitioner who has a decent client base. Then they get one partner, and they each want to retain a big portion of the fees that they generate as part of their partnership agreement. And then as the firm grows, that model tends to go along with the firm. And so the model is something like this. I'm the originator. I'm going to have 50% of my fees retained for me. Anybody who works on my matters or on my cases, I'm going to keep 35% of their fees. I'm going to get that. And then if I work on another partner's originated case, then I'm going to retain, 25 or 30% of my fees for that as well, which leaves the majority of the fees going to the partners, and with a portion of the fees coming back into the firm. So it really does force or make the partners operate more in silos with little interaction from each other, because the more that they work on their own matters, the more fees they generate, the more they get to keep. So it's really only really great if you are, trying to deal with one or two or three partners in a firm, and you have low overhead. If you have high overhead and high staff, this isn't a great way to work together.
Agreed. I think there's a lot of risks with this particular compensation model as well, because the firms you see it a lot in a solo that has expanded, maybe brought on a couple of associate partners. Right. It works if the practice areas are complementary, where you're referring, maybe one does bankruptcy, one does family law, one does personal injury, and the practice areas are separate. But when they operate with this in the same practice area, that's where I see, and don't know if it's the same for you, Laura, I see the highest rate of deflection from the firm, where, because that's my book of business, I've built it and I'm just going to take it with me. So I see the highest amount of, I see the highest amount of that book of business being able to just walk right out the door, because there's not an incentive, like you said, to work with other members of the team. There's no contribution.
Right. They're very much siloed in their own practice area with their own team of people. And the firm generally doesn't, the members don't collaborate. And then we get into these hybrid compensations where it's neither lockstep or merit-based, but it's a base salary. And so each attorney agrees to a guaranteed income or a base salary. Sometimes it's based on seniority. Sometimes it's based on who founded the company. Sometimes it's based on rainmaking. Sometimes it's based on how much you get as that base income. But then you add on performance metrics, billable hours, realization from your billing, number of cases, opened, whatever the metrics are that the firm is handling. In these hybrid situations, it's still very much individual driven. We have one or two firms that we work with where everything down for every single partner is itemized down to how many hours they use each staff person. So you can get as complicated with these compensation models as the partners can and the attorneys can come up with ways to minimize their own personal expenses or their own percentage of expenses and maximize their own revenue. So that sometimes that puts the staff, if they're sharing staff, into a predicament too, as to who are they supposed to be working for when. The profit sharing compensation is a little bit different. This really is more in line with the overall profitability of the firm. The easiest model is if you take the profit the firm makes, which is revenue minus expenses. You take that and you divide it equally amongst the number of equity partners in the firm. That is the most common profit sharing compensation model. Then they can get more complicated because the more factors you put in terms of seniority, performance, contribution, the more complicated the formulas get, the higher the cost of reporting. And I don't mean just developing reports. I'm talking about the amount of time it takes for someone within the firm to have to go in there and actually prepare these reports if there's not a standard report that can be created from the data within the system.
And I think we're moving on soon to non-attorney compensation models. One of the last here is hourly billing with a percentage compensation, which ties back to the number of hours billed per year, which there's always controversy around this as more firms start to talk about work-life balance and getting away from that 2,000 plus hour billable requirement that you see in big law.
Well, that's true. And I think anytime, what I have seen is anytime there's compensation models based on people working in individual silos with, expectations that are around personal profitability as opposed to firm profitability and, personal revenue gains as opposed to client services, being at the forefront, then that really digs down into the overall culture of the firm. And as you were saying, once you have a culture issue, Chelsea, then you get a lot of lawyers breaking apart, firms breaking apart, people taking their teams and leaving to a place where they think that it's going to be better because, if you feel like you are unfairly compensated in any environment, not just law firms, but wherever you are, that starts to make people edgy, irritable, looking for somewhere else to go.
Great. And that's also, all of these compensation models we share with you, but as part of the managing partner's strategic plan, a conversation about culture and client experience should drive the decision around what type of compensation model you put in place, because it all ties back to how is this going to affect the clients, which in turn, how is that going to affect our presence and brand in the marketplace, our online reviews. If firms are siloed or you have a compensation model in place that does not incentivize supporting the mutual client base, making sure that the clients are feeling taken care of. Like, I'm not taking that client call. I'm not picking up the main line because that's not my client and I'm not going to be compensated for that time or for that case. It does create some client satisfaction issues that I don't think are separate. I think that they're directly tied to how your team is incentivized and also whether or not that's one of the advantages of having a base salary is that everyone is contributing equally and they also have a little bit of breathing room because they know that they also have a base and their personal contributions from a compensation model perspective are going to be added on top of that.
Well, I also think that there's attorneys probably need, let's assume, for the sake of a chuckle, that an attorney works only 40 hours a week. Right? Only 50% or 20 hours a week are they actually engaging with clients. The other 20% of the time they're doing business development, they're doing marketing, they're doing non-billable tasks. Maybe they're writing briefs, they're doing that sort of work. And so there's a lot of work that attorneys do that cannot be tied back to a billable hour. So when compensation models recognize those types of things, and time can be tracked or handled in such a way that that you're looking at, okay, we know you're going to be doing marketing, so we're going to go ahead and count a certain number of hours every month into marketing activities, and then you're tying marketing activities to new client development and clients coming in and all of those types of things. There's progress being made for the entire firm at that point. And so it's just not all about the billable hour, recognizing that, you don't need to have everything be about that. It takes a lot of pressure off as well.
It does. and the work-life balance, which, it would be a totally separate webinar to talk about it, but it really is that piece of what kind of culture do you want to drive? And are you trying to build an environment where, and what is your succession plan? Are you building a firm where eventually you have an exit strategy and your associates are going to come up and they're going to be able to take over? Or are you building a culture and align compensation models with keeping them there so that they're happy, but then being able to, they may, understanding that they may leave and go start their own firm at some point.
Well, I think in addition to that, though, there's also when I talk to attorneys and I talk to firms in general, we talk about all of the members of the firm, not just compensating the attorneys, but talking about what is going to make a good firm culture, what drives a good firm culture. And there's really 6 elements to that. There's purpose. Everybody coming into the office or everybody working for the firm has to have a purpose. Why are they there? What does the company as a whole believe in? What you were saying, what is your brand? What is your message? What is your mission? And building that so that they believe in it when they come in. And then there's success. How successful do they feel every day when they sit down to their desks? Are there tools in place? Do you have the right software in place so people aren't manually doing things? Success and the things that people like to do is tied directly into how successful they are doing that. So recognizing that is important. And then there's opportunities. Is there opportunity to grow with the firm? And what do people need to do to get there? Can you come in as, can you start in the firm in like the mailroom as with previous experience being a horse trainer, and what does it take to build your way up the firm and do that? And does the firm as a whole support that? Do they allow you to be training and learning and growing along with that? And how much do the people feel appreciated, not just monetarily, but talking about work-life balance and affirmation? Do the employees get time with the partners, or are they being told what to do as the partner flies past them in their desk on the way to their office to close the door and be in there all day long? Do you in this day of social media, are you crowdsourcing, employee accomplishments and things like that as much as you are your case wins and things like that? Because people like to be appreciated. They like to feel like people care. And then there's just general well-being, physical well-being. Are they working in a safe environment with, security and protocols? Do they feel like they've got mental health and emotional support in their jobs? I mean, today that's a big thing. You can't hire anybody if you don't have some type of mental health
program.
Yeah.
Benefit. Exactly.
Benefits, right?
Yes.
Exactly. Financial compensation is important, making sure that you're paying them at least what the market is demanding for their job and their experience at any point in time. Does your social programs inside of your office, do they promote absenteeism or do they promote presenteeism? And then finally, just retaining talent and community and things like that. And I guess I just started talking about all of those things, Chelsea.
No. We can hop around. It's okay. But I agree. I think that, and it's good that we're switching directions, because it's not just about compensation plans. And I think you brought up a really great point, and I'm happy to bounce to different sections of today's presentation, because it is not just, especially the younger generations, it's not just about how much they're getting paid. It's about, am I going to be able to work from home? So those flexible work arrangements, the ability to telecommute, there is a element of magic and an element of collaboration and productivity that happens in a physical environment. We're still social creatures, so we still do need and benefit very much from meeting in person. Some clients really prefer to meet in person. So allowing them to have some of that work from home, but maybe how many days per week or how many days per month, and can they dictate their own schedule? And then also you mentioned talking about employee benefits. What does your benefit package look like for attorneys and non-attorneys? Is this comprehensive healthcare? And now, largely due to COVID, mental health programs have become significantly more accessible. They are often covered or as a component of a health insurance plan. They have a mental health hotline, or in some cases they call it like a life hotline, where you can call and ask questions about different various life issues that you may be going through outside of work, parental leave policies, retirement plans, and just generally perks. And like you said, team building activities and social events. So while these might not seem like tangible pieces of a compensation model and more of a HR or people and culture model, people and culture is an incredibly important part of building a law firm, and it trickles down and it translates into that client satisfaction. So, and we talked a lot about attorney compensation models, but the benefits, the team building, the ability to work from home or having flexible work arrangements. You can do things like having a home office stipend where, they have $200 when you hire them to enhance their work from home so that they're not working in their living room, and that maybe they can create an aesthetically more suitable environment for being on Zoom all day. If they are, like, you can work from home, but let's make sure you have an actual legitimate work from home setup. Do you have a desk? Do you need a standing desk? Do you have an actual office chair, or are you working at your kitchen table? Like, those types of things should be part of the conversation if you are going to offer flexible work arrangements and give employees the ability to work from home. It's the small things. And so if we think about non-attorney, when bar associations or independent coaching communities deliver seminars around the country, this is one area of managing a law firm that is really misunderstood. I think a lot of attorneys believe that because that it would be fee sharing of some kind to incentivize non-attorney staff, and that is not the case. You can legally offer performance-based bonuses, but they have to be tied directly to KPIs, such as, let's just say for an intake staff, number of percentage of prospects that call and appointments booked, or increasing the number of appointments booked, or decreasing the number of no-show appointments because they're calling or using a professional texting service to text them the night before. And you can reward them financially. You can also reward them with things like extra days off. And that all has to be tied to performance reviews and giving them a growth path. So performance reviews not only are just a great practice and should really be a mandatory practice across the entire firm, attorneys and non-attorneys alike. If you're not doing performance reviews, I consider this to be a liability in your business because you don't have regular documentation as to what is happening with a staff member, attorney or non-attorney. So I don't know if you have any recommendations around the cycles of performance reviews or how you've seen attorneys implement these. And we do have a question, so we'll jump to that in just a second.
First, it really depends on what the bonus structure is or the compensation structure is that you have across the board for your people. So are you measuring your metrics and rewarding on a quarterly basis, on a biannual basis? Every 6 months? Are you only compensating at the end of the year? So you have to build your performance reviews around whatever it is that you're going to be reviewing. So with quarterly reviews, then they deserve a quarterly performance review. So what can they do next month or the next 3 months in order to qualify for the performance bonus or whatever it is that you're deciding to do with the staff? I think that opens up conversation and dialogue all the way around. One of the assessments that we do for our clients is a workflow assessment, and that allows us to survey the employees and actually see what kinds of things are causing them stress, what kinds of things do they like about their job, what do they not like about their job, so the firm can go with some course correctment.
And we've got a few questions coming in, so I'm going to actually pause sharing the PowerPoint and jump into these. Laura. So first, can you talk about models for origination of new clients, such as a percentage of revenue collected, sunset provision, and a duration of a sunset provision?
So, with the compensation models that have to do with the origination of new clients, what I find is that there are multiple ways that the same dollar is reviewed. So there's the dollar that's originated, there's the dollar that's earned, and there's, and a lot of times that dollar can only, it can only be divided up so many times. So you may be originating the client, but are you actually the one working the client and or working the case, or have you given that to another attorney to work? And in which case, how are you dividing that? So you have to look at the model. So for origination, if you had a 25% origination revenue for every matter that you originated, depending on whether you worked it or not, then what are you doing with that other 75%? And how are you dividing that up among the people who are actually doing the work, the requirements for the firm expenses, building, things like that. As far as sunsetting provisions, what we have seen is that when attorneys decide that they're going to retire, which is what I'm assuming you're asking about, they turn the origination cases over to a newer partner, and then they will retain a certain percentage for a certain number of years, 15% for 5 years, less whatever expenses. So that they continue to have some revenue for a while and are there to advise on cases for a 5-year period of time between the time they stop originating new matters and kind of phase out of the firm as the new partners buy out.
And thank you, Laura. Last question until we return to the PowerPoint. Can paralegal bonuses be based on billable hours? It's a gray area.
That is a gray area, because really the only place where the board of, the ethics say that, only attorneys can be compensated on billable hours.
But
so, and there's a lot, a lot of firms are going to bill their paralegals out. So
I have seen firms do it based on utilization rate. So not based on billable hours, but based on utilization rate that is tied to different metrics in the firm. So what percentage of your time is being spent on cases? So it's not being tied to a fee amount, it's being tied to a utilization rate. I have seen that, which is a different way of doing it, but compensation directly on billable hours really falls into that ethical fee sharing gray area. And again, a good way to tackle that, because it is state by state in some cases, is to call your local state ethics hotline and say, what are your specific rules around compensating paralegals based on billable time? The most common one that I have seen is utilization rate, because it's a metric it's a performance metric. It's not a fee or a billable, a dollar figure metric.
Right. But for the purposes of us giving any advice on that, we have to go with 5.4a, which is only attorneys. Non-lawyers cannot be compensated based on fees earned. That's what we have to.
Hard and fast rule.
Yep.
We'll jump back into the presentation. And we're going to move towards wrapping up today with a couple of other non-attorney compensation models, and such as performance-based bonuses. We talked about that. Then recognition awards. So you are able to establish a recognition program. So for employees that really go above and beyond, or just have an employee of the month, or simple things like sending a thank you note, recognizing their efforts. These can actually go a long way. And there can be non-monetary awards, such as an extra day off, or if they are working with a local charity, a contribution to a local charity in their honor for their work, things that you can do socially as a group. Like, let's say you have an intake team and they're hitting their goals, that you go out and do a team building activity. So not everything has to be monetary compensation, which is a great way for especially some of the solo small firms that are, that have a tight cash situation, for them to still build culture and increase employee retention without having it be monetary amounts that they have to shell out on a regular basis.
Well, I think one thing that you just talked about, Chelsea, too, was charities and community involvement. And that is something that I have seen a lot of people coming into the market very, very actively involved in. And so recognizing what charities are important to the employees and either doing a firm work day or letting them choose what charity to go and work with, or a day at a soup kitchen or some community event. Those things go a long way. It not only builds your brand and your mission, but it also and shows that you're an active part of the community, but it really means something to the employees who are passionate about these charities that the firm cares.
Absolutely. And now we'll talk about some of the reports that we discussed in the beginning, and we can go back to best practices here for a second. I know there's a lot of compensation models that we've gone through today, but just to reiterate best practices, it's very important to do a dry run before rolling out a compensation plan. So do you have tracking and reports? Are you measuring your profitability so that you make sure that you're not giving away too much margin? And then are you going to be able to pay on a regular payment cycle? So it is normal, Laura, if a firm rolls out a compensation plan, for things to be paid on a quarterly basis and to give the firm time for any fee disputes or late invoice payments to come in. You don't want to be in a position where you have to pay out up front for work that the client still hasn't paid for, that could still be disputed. So just making sure that you have, one, given the time, your 3 areas: 1, that you have tracking and reporting in place; 2, that your cases are profitable enough to offer the compensation or bonus structure that you want to offer; and 3, that you've given the firm enough buffer from a time perspective to be able to pay out on time. And some of those reports should all be goal and KPI oriented, but just 3 real steps in the process: ensuring that the goal can be measured, tracked, and reported; implementing technology if you don't have it in place, like reporting or a practice management system that can support the compensation plan, like attribution source or referral tracking, like that origination that Laura was discussing; and that you do have regular meetings, either internally leadership, or that these reports are delivered to you by administrative staff member on a weekly or monthly basis, depending upon how aggressive you want to grow. Some of the reports associated with origination tracking that Laura mentioned would be lead tracking, referral attribution, like source, lead to matter conversion. This is a very simple: how many leads do we get to how many matters are actually being retained and signed across the entire firm. And then matter profitability by source. So business development or traditional rainmaking is obviously going to be much more profitable from a cost to acquire a client, or CAC is the acronym, CAC. If you don't have, this is more of an advanced report, but that will give you true matter profitability because it incorporates marketing or origination, like taking a client to dinner, and it removes that from the total amount paid for the legal service. So it gives you true profitability. And then this is really, we talked a lot about these reports in the first 2 installments of the financial wellness series of revenue and profitability, WIP, utilization rate, realization rate, and time to bill. So if you do have questions about these reports, I would recommend going back and watching those other 2 sessions that we do have recordings available for, because we get into the nitty gritty details of how those reports work, why they're important. Built into Smokeball, you do have automated time tracking, and then other built-in reports, matter insights, which give you that matter profitability, Fee earner report allows you to filter by date range, review individual staff performance, and you can also export all of these reports into CSV files or just regular Excel workbooks so that you can manipulate and create compensation reports to review with the employee. And again, ability to filter. One of the favorite features of Smokeball with our clients is the ability to right click and filter right there within the reports. And then lastly, resources. Laura, I am by no means a law firm compensation model expert, but you do offer consultations for various business services as part of CMG's consulting program. Would you mind just sharing some of those options that are available if any of the firms with us today would like to work with you?
Sure, we offer a tech stack audit, which is just a review of the software and applications and technology that you're using within your office. We also do a tech stack assessment, which is a deeper dive into how you're using them, not just what you're using. We have a workflow and assessment, which just has to do with how people are using technology, interacting with technology. It dives deep into identifying processes and procedures and within the office that may or may not be working for you, whether it has to do with what's missing, what do you need to add in, do you have marketing and business development software? Do you need it? Do you have time and billing software? Do you need it? How is your accounting software doing? How are your reports? Those types of things. And then we have a software selection assessment where we can help you determine what the best software is for your firm. And finally, we do strategies for business, just general business strategy, technology, budgeting in general, and cybersecurity consultations.
Thank you, Laura. And as a follow-up to today, you will receive a copy of the recording as well as the slides. You can reach out to Laura or myself at any time. We're going to do a last call for questions. As always, Laura, it has been such a pleasure, your wealth of information, and we really appreciate you doing the entire financial wellness series with us. If you have questions on where to find those previous recordings, feel free to reach out or respond to the post-show email, and we will get those links out to you. But until then, any final thoughts, Laura?
Yes, I just have one. One is any compensation model that you all decide to embark upon, make sure it aligns with your company mission and the values of the firm. And finally, whenever profits are prioritized over your client's experience with the firm, you may have a short-term boost in revenue, but a long-term loss because that client will probably go somewhere else. So keeping your clients and their experience with you forefront from the time the phone is being answered to the time they have to pay their invoice to you, all of that is their experience with you, and that needs to be the number one thing that you focus in on.
Great. Excellent point, Laura. Thank you so much. And we really appreciate everyone taking time out of their day. We'll let you get back to it, and we'll see you again soon.
Thank you, Chelsea.
Of course. Thank you, Laura.
Bye.
Bye.